128 million naira and 22 billion naira are just two of the amounts that Nigerians have lost this year to investment fraud. In the past 5 years alone, millions of Nigerians lost over 300 billion naira to Ponzi schemes or fraudulent investment schemes. Here's a breakdown. Over 2,000 people lost 900 million naira to Yuan Dong Ponzi. Galaxy Transport Ponzi schemes defrauded victims of 7 billion naira, while 2 billion naira was lost to Famzi Interbiz Limited. Nigerians who invested in Cow Lane and Durrell also lost 100 million naira to each of these outfits. For the infamous Mavrodi Mundal movement, better known as MMM, that operated between 2015 and 2016, 3 million Nigerian investors lost 18 billion naira. Now, PESCO investors also lost over 106 billion naira within the same period. The Nigeria Electronic Fraud Forum, which was unveiled in 2017, stated that the Nigerian investing public also lost another 11.9 billion naira to MMM. Investment fraud and Ponzi schemes are on the rise globally. In West Africa in 2020, Imperial Solutions presented itself as a leading global investment company that manages multiple asset claims. By the time the dust cleared, over 5,000 people had lost millions. Earlier this year in Kenya, a fraudulent scheme called Amazon Web Worker, not affiliated with the global company, defrauded Kenyans of millions of shillings. And the schemes have moved to the next frontier. In South Africa, with $588 million worth of Bitcoin from customers, Mirror Trading International may have pulled off the biggest crypto scam of 2020. Kenyans also lost millions of shillings in 2018 and 2019 to Volex 10 Global. In 2019, Uganda's Dunamis Coin Resources closed suddenly with $2.7 million in investor money. Today, we're looking at how to avoid fraudulent investment schemes. I'm Tolulope Adeleru Balogun. Welcome. This is Business Edge. Now, joining me on today's episode of Business Edge is Onome Ohwovoriole. He is the lead analyst at Money Africa. Onome, welcome to Business Edge. Thank you so much for joining me.
Good morning, Tolu, and thank you for having me.
So you would have heard the numbers that I reeled off, and really that's just the tip of the iceberg. There are a number of Ponzi schemes, a number of investment schemes running at any point in time, not just in Nigeria, but across the continent. And because of issues with data, it's difficult to really have an understanding of how much people have truly lost. But people seem to think that it's very easy to fall prey to these schemes, and it's people that are either ignorant, uneducated, or illiterate that seem to fall prey to these schemes. Is that really true? Is it about being ignorant, uneducated, illiterate that makes you more prey for these schemes?
I think it's a mix of all of that, and you can add a pinch of greed as well. Greed usually is a key driver. So literacy is there, greed is there, and you know, one thing, when there's economic hardship, actually, this research to show that when there's economic hardship and things are really tough as an economy, then Ponzi schemes actually do much better because people are more desperate, people are looking for quick sums to make and all that. So it's a mix of everything, really. But I think greed, in my view, be a key driver.
All right, so you talked about people looking to make money quickly. There are issues around rising inflation, the poor capital market performance as well, possibly the returns that might not be coming in as well from securities and government bonds and things that may open people up to being more approachable when it comes to these schemes. What other reasons do you think make it easy for people to fall? Because it might just be very easy for us to say that it's poverty, or very easy to say that people are looking to get rich quick, or that it's greed. There are educated middle-class people who fall for these schemes as well.
Yes, and that happens, you know, but I think it ultimately boils down to ignorance and greed. Yes, the Nigerian investing environment is challenging due to all the factors you stated. But then again, I think that with the advent of technology, if Nigeria doesn't offer you or the naira doesn't offer you the kind of returns you're looking for, you can explore returns, as investments outside the country, right? But I also think that, if one has a long-term view, really, um, some of these returns, I mean, somebody's saying I'm going to do what, 10% a month, 15% a month. That's really outrageous because if you look at the risk-free rate, right?
Wait,
The rate
Onome,
of
don't get
return,
ahead of me. I want us
yeah.
to get to that because I think it's part of the conversation as to what people who want to invest need to look out for. So let's talk more now about how these fraudulent schemes take place. What kind of schemes are we talking about? Ponzi schemes are slightly different than some of the investment schemes we've been seeing that are promising these fabulous returns on investments, as you mentioned. But what kind of how do they shape up? What do they look like that people should be looking out for?
I think the first thing to look out for is that the business model, right, is one that cannot be easily explained, or one that, fundamentally doesn't make sense, right? So that's the first thing. So for instance, you have network marketing schemes, which are in themselves not illegal, right? But when you don't have an underlying product, and if you're reliant on fresh funds coming in, after a while, that source of funding is going to dry up, right? So that's the most common issue, or you would see. Fresh funds are what people rely on. The business has no realistic model. It's built on unrealistic returns. But I think more importantly is that the risk involved isn't clearly stated, right? Every form of investing has risk. So if someone is promising you fabulous returns and isn't telling you about the risk involved to generate those fabulous returns, then that's a red flag, right? Multiple red flags. So
Okay,
those are the
Onome,
things you should look out for.
Okay, Onome, let's pause that conversation there on the red flags. We're going to take a quick break. When we come back, we'll get more into this conversation. What's the responsibility of the regulators, particularly here in Nigeria, the Security and Exchange Commission? And we'll also look at what the returns on investments are promising. Really too good to be true turned out to be too good to be true. We'll be right back. This is Business Edge. Can we, you know why we went on a break. Can he hear me?
Hola.
Onome, can you hear me?
Loud and clear.
So you're moving too close to the camera, and there are times when all we're seeing is the top of your glasses. Please, I need you to sit back. That's why we had to go on a break. It's cutting off your face.
Okay, let me adjust.
Please.
Does this work?
Absolutely, but you have to say it like this, please.
Okay.
All right, thank you. Now we're talking about avoiding fraudulent schemes, fraudulent investment schemes, that is. Be careful of where you put your money. From Nigeria to South Africa to Kenya, across the continent and around the world, investment fraud schemes like that are on the rise, and millions are losing millions of dollars as well. My guest is the lead analyst from Money Africa. Onome, let's come back to the forms that some of these schemes take. You talked about the multi-network operations that some of them have, bringing in other people. So basically a Ponzi scheme, which requires you to bring in fresh, quote unquote, blood into the system so that you can climb up and more people can make money. What other forms do these fraudulent schemes take?
Sometimes you see forex trading. And forex trading in itself, right, isn't illegal, right? But when someone offers you unrealistic returns, that's a red flag. And I think thirdly, sometimes you have actual legitimate activities, right? It could be logistics, it could be agriculture, but when these businesses run into challenges, right? And the right thing to do is to say, hey, we've run into challenges. We might not be able to pay on time. We might not be able to pay what we agreed. But rather, what you have happen is that they continue to raise funds. Then they take these funds, use it to settle previous investors. And then, that cycle begins. So sometimes you have a business that was on the straight and narrow and something goes wrong and the owners are only come out to state what goes wrong or come out to state that, look, we can't meet what the targets that we set and had promised. And, from then on, it just becomes illegality upon illegality cast upon each other.
All right, so we've heard from Nigeria's Securities and Exchange Commission, SEC, and I'm sure this message is one that's repeated across the world, warning people to be careful that any person who invests in unlicensed, unlawful, unregistered schemes does so at their own peril. But many have also pointed out that there are gaps in regulation in a way that sometimes allow these schemes to flourish. So let me take that part first. Do you think there are gaps in regulatory activity or in even regulation that allow such Ponzi schemes and fraudulent investment schemes to flourish, particularly in a country like Nigeria?
I would say partly so. Partly so because you have freedom of association, right? You're free to associate with who you want to associate with. But the challenge, and I think where people get it wrong, is that really, and that's the argument between innovation versus regulation, right? Innovation says, okay, start, then as you get bigger, you get regulated. But the mistake that I'd say a lot of firms make in that industry is that they start, and as they get bigger, there is no structure. Expectations remain unrealistic. So I think where maybe I'd like to see the regulator do a bit more would be investor education, because oftentimes people don't know what is a realistic return, right? So maybe for those of us in industry, right, I can say, okay, looking at inflation, looking at the risk-free rate, anything doing 5 or 6 times or 3, 4 times beyond that is a red flag. But for the man on the streets, I don't know what's a realistic return. So I think maybe if we have a bit more education in that regard, that would help. And it has to be an industry-wide thing. So it's not just, the regulators doing sensitization and all that. It also has to be players in the industry, right? But one might ask again, can you be a competitor and at the same time be a judge in one's own case? It's a bit difficult to do that.
And it's interesting you bring that up because in 2020, SEC released a list of 12 companies that they say were illegally operating and defrauding customers. This is 2021. I have not seen a list for 2021, but we've seen throughout the months of this year that almost every month someone has either been arrested by the EFCC or news has hit social media that the owners of the company have fled with millions of naira of investor funds. So do you really think SEC is doing enough? Obviously, people are interested in the activity of investing. Many may not have the knowledge of how to do it right, but do you think there is enough investor education, not just for those who can go to the brokerage firms and the registered investment firms, but for people who want to do the 5,000 naira here, the 10,000 naira there? Is there enough education from the regulator like SEC for them, especially for them to avoid the fraudulent companies?
I think there's always room to do more, right? There's always room to do more, and I'm sure that SEC probably will do that, but where we need to get it right, and here's the mistake that happens. Financial literacy, financial education is taught rather late. So a lot of people stumble into it or probably learn when they start to work. But if we're able to start it from when people are kids, and then they can gradually learn the basics, once that person is an adult and working, you're less likely to do you're less likely to fall into anything that is Ponzi related or that looks like a Ponzi. So, I mean, there's always room to do more, but not just on SEC, the industry as a whole, players, and especially in the fields that are emerging, there's always room, for more education. So I think more education really would solve a lot of these issues. And education in not just English, but even the common indigenous languages, that would help because we realize that there's a huge swath of people who do not understand English. So if all your education is largely in English or largely in maybe the 3 major languages, what happens to the 200 plus tribes and code that we have? Who educates them? So those are kind of things I think we can do more.
All right, so let's talk about returns. You've been touching on it a bit, but the returns on the investment seem to really be where a lot of people get caught. And I want to reel out some interesting returns I came across. So the company that's currently in the news here in Nigeria, Imagine Global Solutions Limited, which claimed that they were running a micro-lending service to small and medium businesses, offered 22% as interest on loans received and 10% returns to investors. MBA Forex promised investors 15% monthly returns. DHIL Nigeria offered a monthly 30% returns. The Kenyan scheme that I mentioned earlier promised 38% for a deposit lasting only 7 days. Imperial promised short-term investment packages offering returns ranging from 11.6% for $50 invested over 16 business days to 230% for an investment of $75,000 up to $1 million over 100 business days. They offered annual returns of over 500%, 10 times higher than the best performing traditional investment funds. These returns seem too good to be true. They turned out to be too good to be true. So is this really a lack of financial knowledge that's leading people to believe these promises and returns? And what can they benchmark? We see innovation in the fintech space all the time. We wake up and one company has gone from maybe a share of their share maybe being $7 to maybe $15 and $20. So people see that money can be made overnight. So how do we educate them when it comes to this return on investment where it seems many people get caught up?
Okay, so I think there are 2 things that people can do. First, the benchmark that should be used is inflation, right? For Nigeria, if you're looking at the 10-year average inflation, it's around, I think, maybe 11-12%. If you're looking at inflation the last 1 year, it's probably 16%, most recent figures. So I prefer to use what's the 10-year average inflation, right? That's around 11-12%. So if your aim is, say, 15 to 20% per annum, right? That should be your benchmark because that's what the inflation rate is. And so your goal is to beat inflation by a comfortable margin, right? Then 2 is that when investing, right, the bulk of one's investment should not be in the highest risk asset category. Where a lot of people get it wrong is they hear, oh, I can make 15-20% a month, or I can do 100%. Then they take everything that they have and they put it into that investment. That's very, very wrong. You should split your investment into 3 baskets. You have low risk, medium risk, and high risk, right? The high risk should occupy the smallest part of your portfolio, right? Then you have medium risk, and then you have low risk. So if you're able to apply those principles, right, there's risk everywhere, But if you're able to apply those principles, then chances of 1, you losing a huge amount of money, and 2, you falling victim to a Ponzi scheme are quite low, because you're going to ask yourself, if somebody is offering me 20 or 30 times the inflation rates in a month or in 2 months or in 3 months, that's a red flag, because if they were doing so well, then ask yourself, why do they need my funds, right? If you can do a 500% return, then why do you need to raise money from anyone? We don't need to.
All right. So when it comes to these fabulous returns, you've talked about the benchmarking against the inflation of the country and looking at some of those figures. But beyond that, what other questions? So we started asking the question of the how. If you're able to get these returns, why do you need more investments? Why do you need my money? What other questions should potential everyday investors look for?
At its basic, they should ask themselves, is this model workable, right? Does it feel right? Intuition is also key. Intuition might not be very mathematical to prove, but it's key. If it does not feel right to you, and chances are, if someone tells you I can do 400 or 300 or 500%, it's not going to feel right to you because that's abnormal, right? So if it doesn't seem right or feel right, please don't bother doing it. Then also, I think thirdly, you can argue that people doing 5,000, 10,000, 20,000, right? Maybe they may not have access or they may not be able to afford some kind of tailored financial advice. But I think that if you really are in the high income category, right, please take out the time to sample the first opinion, the second opinion, the third opinion before you put funds into this thing. It's like health, right? Nobody's going to go to a doctor and the doctor just gives you pills and you swallow them without asking, what do the pills do? What are the side effects? How should I take them? Why should I take them? Am I reacting to them? So people need to, and I think that in fairness to Nigeria, we don't really have a complicated financial system, at least from the retail investor side. If you compare to the US or the UK, the typical document that an investor has to read is way more complex. So people need to ask questions, seek opinions, and if it doesn't feel right, please don't do it.
Okay. I have two more questions before we wrap up, but let's also talk about the credentials of the owners. How important do you think the background, the track record of those who come forward with these schemes are? There are some who have no track record, and then we hear about them crashing, and you're wondering, why would you put your money in the hands of maybe an 18-year-old who has no business experience, doesn't own a company, never managed a company? But if you look at the one in the news right now, Imagine Global, the husband had 8 years of work experience in the bank. Some of his first customers were his banking colleagues, and the company actually spread by word of mouth. So how important are the credentials in the background, the track record of those who are running some of these opportunities? And I say that with quotations if you can't see me.
I think credentials are key, but, in the world in which we live in now, especially in a very innovative space, with the rise of fintechs and all that. And let's look at it. We're Nigerian. A lot of the great opportunities are available these days are fintechs established like pretty young Nigerians, right? So I think what's more important isn't necessarily just the background of the person. Does the investment model make sense? You could have a newbie and who comes up with something that disrupts the existing system. But the underlying model, right, is realistic and it makes sense. So that's much more important. Even with backgrounds, what's the term? Saints become sinners, sinners become saints, So, a person could be a saint today and a sinner tomorrow. So really, when the person was a saint, the person had a great background. So what happens if the saint becomes a sinner?
So let me I apologize because of time. I want to quickly ask you this question. We're seeing people come out and say they've lost millions of naira, millions of dollars. These are unregistered, unlawful schemes that they've part of. Do they have any recourse to getting their money back? Or is that money basically good and gone? Very quickly.
Honestly, the wheels of justice spin very slowly. And in Nigeria, they spin extra slowly. So honestly, it's going to take a while, so it's best to simply just write off that money, get a good night's sleep, and start again. It will take years, and in some cases, it might take decades to recover that money. In some cases, you might never recover
Never get it back.
Really. So it's best to just write it off and start again.
All right, Onome, I know this is a conversation that will continue. Probably before the end of the year, we'll hear of another scheme, unfortunately, being busted and millions losing their hard-earned naira, rand, even shilling across the continent. But hopefully, as we continue to educate, we reduce the pool of those who fall victim. Onome, thank you so much for joining me on Business Edge.
Thank you for having me.
All right. And the education will continue because, as we know, investment is, by its nature, risky. Legitimate investment platforms are usually keen to inform you of the risk involved when you're putting their money with them. If a person is promising you 30% monthly returns and telling you it is a low-risk investment, then they are already lying to you, and you should not bother doing business with them. But continue to do business with us right here on News Central. Up next is NC4 to watch. And we have NC4 to watch for you right now. A few stories we're keeping our eyes on. We start with Nigeria, where the Tax Appeal Tribunal in the country has ruled that MultiChoice Nigeria Limited has met the conditions necessary to pursue its appeal against the huge tax levied on it by the Federal Inland Revenue Service, FIRS. This means that the firm now has the green light to defend the fine that it was given. South Africa is leaving no stone unturned to end electricity blackouts. The cabinet has approved a replacement for the 56-year-old Safari 1 nuclear reactor at Penlindaba. We'll wait to see if this makes any difference. Al Song, a digital marketplace in Sudan, has raised $5 million to build a national payments network enabling quick, easy, and safe transactions for the citizens of Sudan. The fundraising round marks the first international venture capital investment into a technology business in the country since international sanctions were lifted on the country following a 30-year period of isolation. And finally, Kenya and the United States have signed a deal that will enable Kenyan small and medium-sized enterprises to take full advantage of the African Growth and Opportunity Act and also prepare to leverage any future trade agreements between the U.S. and Kenya. That's a wrap. You are working very, very hard for your money, and we're working very, very hard for your time. Put your time in our hands, and we give you all the latest coming in from around the continent, making sure that Africa is first. I'm Tolulope Adeleru Balogun. I'll see you again soon.